Good afternoon, everyone, and welcome to today's webinar titled Regulatory Compliance Reporting in the Gulf States. Are you ready? My name is Ben Christensen, and I'm the Global Alliance Director at Corefiling Limited, and I will be your chairman for the webinar today. Before we get started, if you have any questions about anything you hear in today's webinar, please make a note and we will tell you how you can submit your questions once you've heard from all three of our speakers. To assist our speakers, could I ask everyone to please mute your phones now? I would like to start by introducing our first speaker, Ajaz Ahmed, who is a partner of financial services from Deloitte.
Hello, everyone. This is Ajaz here. I lead the financial risk and regulatory advisory practice within Deloitte. We work with financial institutions, regulators within the Middle East market, advising them around regulatory and compliance advisory services. With that brief introduction, I will start off with my presentation. The topic I'm here to discuss with you all today is the impact of banking regulation that we see in the Middle East and the wider Gulf market. There are, as we know, a number of recent regulatory changes have happened that is affecting the financial services industry. One of the key regulations is around IFRS 9, which requires financial institutions to classify their financial assets and to recognize their impairment. We are aware that we are aware that a lot of banks are embarked on a journey to help them migrate from the erstwhile accounting standard, which is IAS 39, to the IFRS 9, the new accounting standard. The second major change that we are seeing from a regulatory perspective in the Middle East market is that the regulators are embracing risk-based supervision as opposed to compliance-based supervision, which had been done traditionally in the past. Under the risk-based supervision, the regulators are looking more on a forward-looking risk indicators for the regulated entities in order to come up with their regulatory stance in terms of performing off-site, on-site, and thematic reviews on their regulated entities. The third big piece of regulation that we have seen come up, which is actually under implementation in the Middle East region, is around Basel III guidelines. Although the standard came out in the 2015-2016 time period, there is a transition period that has been defined within the Basel III standard, which the financial institutions are going through, and the standard is fully applicable starting the January 1 of 2018. And under the Basel III, a number of capital and liquidity parameters have been defined, which the banks and the other financial institutions have to comply, such as net stable funding ratio, liquidity coverage ratio, leverage ratio, so on and so forth. The next big area of regulatory impact within the Middle East region is the revised Basel guidelines that are coming up for the three major categories of risk, for the credit risk, market risk, and operational risk. So as we are aware, BCBS, the Basel Committee on Banking Supervision, has issued revised guidelines relating to credit risk, market risk, and the ops risk, which details out a slightly different approach. Capital adequacy and the prudential capital needs to be computed. And the last but not the least is around the FRTB, which is what is called as the Fundamental Review of Trading Book, wherein the regulators require banks to have more detailed segregation, if you will, between the banking book and the trading book. This is to make sure that there is a proper Chinese wall arrangement between the bank's own investment banking activities versus the commercial banking activities. So, ladies and gentlemen, this is really to, in a nutshell, the major regulations that we see playing out in the year 2017 and 2018 that, in our view, will have a significant impact sector in the Middle East region. Deloitte conducted a study on the emerging regulatory outlooks across EMEA region, which is Europe, Middle East, and Africa, to identify what are the major themes of areas that would be affecting the financial services sector from a regulatory perspective. And there are four key areas that has been identified. The first one is the financial resilience. This is what we just talked about in terms of the upcoming Basel II and the Basel III and the Basel IV regulations. The push from the regulator is really to make sure that there is a strong resilience within the financial services sector, particularly from a banking perspective, and also it applies to the insurance and the others, where regulators have started talking about implementing Solvency II for insurance sectors and capital standards for the investment banking sectors as well. So that's one major theme in terms of the financial resilience. Regulators want to see much stronger financial market in the region. The second major theme affecting the region is the regulations for the new technologies, what we call as the fintechs. There are a number of fintech players who have started emerging in the marketplace. Some of them are newly started entities, and some of the other fintech players that we see are the ones that are being launched by the brick and mortar financial institutions, if you will. A number of big regional banks have launched their version of fintech in the form of digital banking, secure payment solutions, etc. So this is really opening up a very interesting and, if you will, in some ways disruptive technology into the market. What this means from a regulatory and compliance perspective is that the way in which the fintech firms would have to comply with the regulations is obviously going to be quite different from the way traditional financial institutions have complied. And the fundamental reason being that the business model itself is quite unique and very different from the traditional brick and mortar business model that the financial institutions have been used to. And some of the regulators globally have also started, making certain amendment to the way they oversee the sector. To give you a couple of examples, French and German regulators have recently established a dedicated fintech regulatory units within their organization to help supervise, regulate, and oversee these new segment. And the regulator in Switzerland has, in fact, is considering issuing a specialized category of license and regime to help regulate and manage the fintech firms. So this is something that is going to, we see playing out in the next couple of years at least in the Middle East market. And the third theme is really around cyber and IT resilience. I'm sure this topic is not new to many of the participants here. You must have heard this in many of your board meetings and the executive committee meetings, where this year, particularly this year and the last year, there have been a number of high-profile attacks on financial institutions within the region, which has resulted in a lot of media attention as well as regulatory attention. And supervisors are obviously also, responding to this new and emerging threat in the form of coming up with more detailed regulations around cyber risk. And to give an example, in January of 2017, the Office of the Comptroller of Currency, OCC, and Federal Reserve Board have actually issued a detailed guidelines on cyber risk, and they have defined a enhanced cyber risk standards. And we foresee that also coming into the region, where the regulators would start coming up with your local guidelines on how cyber risk needs to be managed within the regulated entities. The conduct and culture, a key area that's also emerging from a regulatory perspective. Although conduct and culture does not have an explicit definition within the regulatory ambit, as in credit risk, market risk, and ops risk, it encompasses basically a wide variety of activities and types of behavior which fall outside the other main categories of risk, such as credit, market, and operational risk. So this refers to the risks attached to the way in which a firm, its staff, conduct themselves with the regulators as well as with the customers and with the other financial institution players. The regulators are coming up with, again, pushing their regulated entities to include conduct and culture risk as part of their regulatory agenda. And to give you an example, in many of the jurisdictions in the Middle East region, regulators have started asking their institutions to include a commentary on how they are managing their conduct and culture risk within their ICAP documents. These are the annual submissions that are made to the regulators that just go on to show how the regulators are serious about conduct and culture and where they would like to see much more articulated and formalized strategy on how the organizations are going to be managing conduct and culture risk. So this is really a bit of statistics to share with you all on, what has been the impact of the regulatory non-compliances. As of March 2017, global banks have paid penalties and fines to the tune of $320 billion for regulatory non-compliances around money laundering, market manipulation, and terrorist financing, which really goes on to show that this is compliance. Regulatory compliance is a serious business, and if organizations don't comply with these standards, there is a heavy financial and reputational penalty that is bound to hit them. And within the region as well, the regulators have become quite active, where, for example, DFSA, Dubai Financial Services Authority, in April 2015 had fined one of the large financial institutions about $8.5 million for the non-compliances around wealth management. And in 2016, we also had instances where Saudi Capital Market Authority, i.e. CMA, had imposed penalties on certain firms for violation of their disclosure rules. So this is just to give you a snapshot of what we are seeing in terms of the impact in terms of fines and penalties. So really, in terms of the actions that are being taken by the regulators and how it impacts the financial institutions, there are four major actions that we see that are being taken by the regulators, and how, in our view, how the financial institutions need to respond back. The first one is, as I mentioned, based on the risk-based supervision methodology that's being adopted by several regulators around the region. Regulators are actively involved in monitoring the banking transactions and operations, and they have started using early warning indicators to help them assess and identify risks that the regulated entities are subjected to. So this is, in a way, a forward-looking early warning indicator that is being used by the regulators to oversee their financial sector. Now, how it impacts the entities and how, in our view, the entities need to take these challenges, really, they need to have a higher reporting standards to the regulators, and there is also going to be a lot of pressure to ensure that there is accurate and timely information is provided to the regulators to make sure that the regulator gets a single source of truth and information And the second area that we see where the regulators are taking certain steps is around new product approvals. Regulators are requiring their banks and financial institutions to do a risk assessment of the new products that are being launched, and to ensure that there are proper controls in place for the new products that are being launched. Now, how does it affect the industry is that the industry would have to implement new product approval process more robust, where there is a clear approval process, involves different stakeholders for any new product approvals, such as risk management, compliance, information technology, finance, etc. And any non-compliances to the new product approvals obviously would have to be reported to regulators on a proactive basis. The third theme is, in general, a lower tolerance for non-compliance from the regulator, because the more so than ever, financial services sector is highly interrelated now, with a number of institutions having cross exposures. So any non-compliance that leads to a systemic risk could create a dominoes effect for the entire sector. So hence, regulators have lower tolerance around the non-compliance, and how the banks and regulated entities need to respond back is making sure that there is a strong compliance testing and a monitoring program implemented to give themselves an assurance that they have a checks and balances built within the organization to make sure that they comply with all the relevant rules and regulations. And the last one is really around the automation of compliance. Given the number of reports and the number of regulations that are coming out, the submissions, increased number of regulatory submissions that the banks and other FIs would have to make, regulators expect to see higher level of automation to make sure that they get accurate and the right aggregated information. And on that note, the banks and FIs would need to have would need to make investments on automation and digitization of their compliance process to make sure that accurate information is fed back to the regulator. How do we make sure, as the financial market, that we comply with this ever-changing world of regulations and compliance? The first thing to start off with is making sure that you have a right governance in place, a proper governance framework within your organizations, which has representation from all the relevant business lines and the control functions, to make sure that there is a proper governance, a corporate governance, as well as a compliance governance process in place, in order to make sure that there is a proper segregation between first line of defense, second line of defense, and the third line of defense. The second element is really, do you have the right data in place, which is making sure that you have proper source systems that capture all the risk and the regulatory data that are required by the regulators to conduct their regulatory supervision. What it means is, I think gone are the days where financial institutions, would get a request for information and they would start putting all the information through an Excel sheet and then sending it by email to the regulators. We are seeing a much sophisticated approach coming in place in the form of enterprise data warehouse, automated compliance systems, and automated compliance reporting standards and systems, which help in slicing and dicing the data in order to provide the regulator the right information within the quickest possible turnaround time. And the third and the fourth element, which is really interrelated, as to whether do you as an organization have the right reporting methodologies and the right system environment to respond back. This is really at the core, meaning do you have one source of truth for the different disclosure and the reporting requirements that are sent out, and making sure that reports that go out from risk department, compliance department, internal audit department are all aligned, and they provide the one source of truth to the banks as well as to the regulators. And towards the end, just to summarize, what's critical is really having the right human capital. That's going to make a big impact on the difference to make sure that there's a proper governance tool and the data in place. So, ladies and gentlemen, with that, I hand over back the session to Ben.
Thank you, Ajaz. I'd now like to introduce Chambery Nia, who is the Productivity Practice Head from Emitac Enterprise Solutions.
Thank you, Ben. Hello, everyone. The first slide is about Emitac. So Emitac is a system integrator. It's been in the market in the UAE for 40 years. It's part of Emitac Group. It's been in the market, well known about providing business solutions and IT services, as well as managed services and infrastructure. Moving to the next slide, I'll speak about the solution and the offering that Emitac gives and propose, continuing to what Ajaz has mentioned. So continuing to the compliance and the regulations need and interest that Ajaz has described and illustrated earlier, Emitac is providing a solution, a tailored solution. Emitac is providing a portal solution based on an automated portal that helps and facilitates the communication between regulators and banks when it comes to compliance and audit and reporting as well. So the portal is literally a specialized entry point for a specific industry, and generally a portal will have the normal tasks when it comes to collaboration, business integration, and task management. So moving to the next slide, we'll discuss on the needs and the requirements generally and from each party regarding the compliance and regulations. So generally, the need of having such a portal or such a solution, automated one, is to have an intermediate moderator between the regulators and the banks and the firms when it comes to compliance and reporting, as well as from both sides. It's better to have an automated standard process for the same compliance reporting, to have the same streamlined process between the regulators and the banks. From a point of view of a firm or a bank point of view, they should have help or assistance in the process and the activity when it comes to responding to a specific compliance or regulations or an obligation. So they need to have the exact guidance, and they need to have the supervision and to be able to deliver what's exactly needed in the right way and in the right time. And this helps the firms, and this actually raises the need and the requirement for the bank or the firm to have an early planning. So they need to know what kind of reporting or response that they need to submit, and then what are the time frames given to them, and what are the specific formats and the specific needs that have to be accepted by the regulators. Also, from a bank perspective, they need to have an awareness about the levels, whatever reports that are submitted, whatever response that I send or resubmitted again. What are the corrective actions? Are they accepted or did they fail? So what are the corrective actions, and are there any validation problems? And from the other side, from the regulator's perspective, they need to have a better collaboration and relationship with the firms, as well as they need to have a better visibility and control on the process and the reporting mechanism. They need to have one standard process to all the firms, and it can be done on all the kind of compliance. So they need to have one identified process to avoid any confusion or any mistakes. Also, from a regulatory perspective, they need to set the SLAs so they can they can set the expectations right about the reporting periods and the calendar, reporting calendar as well. Moving to the next slide, we have a graphical representation for how the portal and the automated solution works between regulators and banks. So first of all, a regulator will have to assign an obligation or a taxonomy for a specific period of time with a specific dates and deadlines and guides as well, in case there is a help needed or assistance for the banks to report against. Then the firms or the banks, they will get notified about this kind of obligation or a compliance requirement. They will understand, they will ask for the needed guidance and the guidelines, templates, whatever or type, and then they will be able to respond and report back against this specific compliance obligation. And then the system, MTAC will use in the portal a specified automated tool using workflows and automation to have a proper validation to the submitted report or the submitted response, and will provide the end or the validation result. This result will be propagated to both the regulators and the firms, giving the regulators the edge to track the firms when it comes to valid and invalid submissions and resubmissions, as well as giving the banks and the firms the ability to understand the corrective actions as well as the validation. And at the end of that, as well, continuing on the same compliance, since data is very important, we will have a set of reports and dashboards to know the trend and the direction of all the compliance and the regulations being done and submitted through the portal. Moving to the next slide, we'll view the benefits of having this solution. So having this solution will provide an easier and much simpler and more accessible way for the firms and the banks to communicate together. It boosts the productivity and collaboration because it works as an intermediate between the regulators and the banks, so they have more efficient collaboration. Having an automation or workflows or process management, this reduces errors and the wasted time between both parties. They give more tracking and control and visibility for both sides to track their submissions and their behavior, and as well as their compliance. Having a portal will actually help the regulators and the firms of having the primitive initial validations, which can save lots of time and effort on the regulator side after a bank or a firm report or respond to a specific compliance obligation, to have the initial validation done on the portal site without going to the regulators and getting the results from their side. As well as proven by the case studies that 50% of the time and cost will be saved of having such solutions that will act as an accessible portal with the proper automation workflow tool. And lastly, the major benefits is having insights for both actually the banks, firms, as well as the regulators for what's happening inside as well as what's happening on the other party as well. So you'll be able to have reports on the firms and the regulators on submissions and resubmissions, and as well as from the regulator side, you'll be able to understand the process and improve it through identifying the bottlenecks and the trends of the specific compliance, and the trends of the resubmissions and the trends of the valid and invalid responses and reporting. Moving to the next slide, we'll have sample screenshots from the solution, and how easy and comprehensive it can be. So the first screenshot is from the regulator side, how it can give you the status and the details of a firm or a bank. So you'll be able to have an active or inactive or a pending activation firm for a specific compliance. The next slide, or the next screenshot, will have the reporting calendar. this gives the proper SLA from the regulator side as well as the early planning or the proper planning from the bank side to respond. So you'll be able to know that in this quarter you have to give the proper response and report in a specific compliance, while in the next quarter this will be the other report that you need to prepare. So it helps in the planning. The next screenshot is about after a firm or a bank is submitted the report or the response. This is the reply coming either from the workflow or from the validation done from the financial services and solutions, whether it failed, whether it passed, whether there is warning, what's the corrected action that he should do. Do you still have room for resubmission? Do you require more guidance and assistance for a specific failed report and submission? So, and this is the result page for the submission. The next and last screenshot is for the reporting that can be viewed by banks and regulators, and as well as any reminders or any new submissions, as well as if there is any guidance or feedback or questions need to be asked. Lastly, as a conclusion, so the portal utilize the market best automation tools to facilitate and simplify the compliance and the financial communication between regulators and firm for a better reporting and less risks and less impact. Thank you very much for listening. Back to you, Ben.
Thank you, Hisham. Finally, I would like to introduce Colin Hart, who is a senior sales engineer from Corefiling.
Thank you, Ben. So good afternoon, everyone. So I'm just going to fill in some of the gaps, I guess, around what we've heard already. I mean, in the first section of these presentations, Ijaz mentioned that there's a lot of regulation, and regulation is here to stay, and that one of the only reasons that you'd be able to cope with all of this regulation is through automation. So with Corefiling, what we try to do is to bring that automation into play by removing the need to understand some of the standards, particularly XBRL, away from the business user. So what does a regulatory reporting process typically look like? First of all, there's data collection, which will be from many and various systems where a number of different departments will be collecting and assembling data in order to submit that ultimately to the regulator. So as part of that preparation process, the raw data that's taken from the business systems need to be converted typically into XBRL for then onward submission. And what a lot of organizations have been doing in the past is they've been using the submission portal as their only port of validation, which is fine. And as Hisham mentioned in his presentation, that's a place which saves time and saves money in the whole process of submission. However, what tends to happen in that scenario is that people leave their validation until the last minute, which means there's then an immense amount of time pressure on the people that are doing the preparations, which leads to mistakes and risks of inaccurate filings or late filings. So the best practice is really to do pre-validation at the time that you're assembling. And so that validation doesn't just cover making sure that the data is accurate, but it's also making sure that the filings, when they're submitted, are compliant with the standard, that they're compliant to any filing rules that the regulator is imposing, and also any formulas and calculations and all those kinds of things are being conducted properly. Once those files are submitted, then there are two options. There's acceptance, which means that the report meets all the requirements, or it gets rejected. And that's the point at which risk comes in if you've not done pre-validation. As the filer is preparing for submission, then what needs to be done is to format the data in terms of the XBRL taxonomy, which has been provided by the regulator, which defines all the rules and regulations, data formats, etc., that are acceptable for this submission. And the collected data needs to be converted into XBRL using that taxonomy in order for it to make sure that the rules and the regulations as laid down by that taxonomy are compliant. And this can be complex and time-consuming. And this is where a degree of automation first comes in. And Corefiling solutions provide the ability to convert Excel, which is the normal standard practice in which organizations, filers and banks will collect their data, into XBRL. But we can also generate source forms which can be populated automatically, which are XBRL aware. And those can then be submitted direct by the filer to the regulator. And so in this instance, we're talking about Corefiling bringing a simplification and an acceleration capability to the process of creating the XBRL. So I mentioned earlier about validation pre-submission. And in all reality, it's actually very difficult, if not impossible, to do this without having something that is using the core taxonomy to do the validation. Because of the complexity of the rules and the formulae and the standard itself, then there is a need for a solution or some technology to help with this, which must actually be taxonomy aware. And one of the things that Corefiling can provide is the ability to view filings as they're created and to validate against all these formula rules and standards. So by doing this, we're ensuring that the quality and the validity of the submissions are more often right first time. It's all well and good talking about the solutions we bring to bear, but these have been market tested in battle, as it were, over a number of years with banks and regulators and financial institutions and all kinds of organizations. So we have a wealth of experience of working with these kinds of organizations. As well as having experience within the business community, we are also very active within the XBRL standards bodies themselves. We have people who are working with the taxonomy architectures. Our chairman is actually the head of the UK jurisdiction. And we've been involved with XBRL since its inception, really. We're talking today particularly about our solutions for filers because that's really the focus of today. But we bring to bear automation of the conversion to XBRL. Where there are issues with the submissions in that pre-validation section, we provide collaborative tools where all of the different departments who are bringing the data together and creating the data for filings can work together to address any issues that come up with the data. In many cases, the software that is in the portal that is doing the validation from the regulator perspective is actually the same validation that is being carried out pre-submission. So finally, just a summary of what Corefiling brings to the table. We can guarantee the integrity of the supply chain from definition of requirements to delivery of the completed reports by bringing our solutions together to provide some automation in the process. This, in turn, leads to a faster and more accurate and ultimately more timely submission of information. We can guarantee the accuracy because we're validating along the way, which means that reports submitted will have a degree of consistency over time. Excel can be used in order to automate the process of managing the data submission. We can guarantee compliance to the standards by using the validation tools that we have inbuilt. And as I said earlier, those same validation rules are built often into the portal. And we are also in a situation where the validation carried out prior to submission means that you get more first-time submissions with every submission that you make. So with that, I'm going to hand back to Ben for his closing comments.
Thank you, Colin. And thank you, everyone, for attending today's webinar on regulatory compliance reporting in the Gulf states. Are you ready? Today, you have heard from Deloitte about the impact of banking regulations on reporting and the impact of non-compliance, how EMITAC offers specialized solutions utilizing the market's best automation tools to facilitate and simplify and financial communication between regulators and firms, and how Corefiling can help you save time, money, and effort by providing services and solutions which simplify and accelerate regulatory reporting, developed from deep understanding of regulatory reporting and the underlying XBRL standard. If you have any questions or would like further information on any of the topics raised today, please email marketing@corefiling.com. That's marketing@corefiling.com. Once you leave today's webinar, you will receive a follow-up email within 24 to 48 hours with slides that correspond to the presentations heard today, as well as access to the full recording of today's webinar and contact details for any questions that you may have. On behalf of Corefiling Limited and our presenters, thank you for joining us and have a great rest of your day. Thank you.